This is our Forex blog for June 27th, 2011. And like most days, we really want to buy the super strong currencies versus the weak ones and sell the weak ones versus the strong. Last night, for the most part, the dollar, Sunday and most of the night, the dollar was strong. You know, there was an hour, 3 hours here, hour and a half here, 2 hours here of weakness, and again another hour here. But all the time frames set up, and you want to trade the strong dollar against one of the weaker ones. It looks like the Australian dollar was consistently weak throughout the night. The New Zealand dollar was as well, plus the longer term trends are down, and possibly the CAD too. The CAD had brief amounts of weakness, so when you saw that at 1 here and the dollar was still strong, you could have bought the dollar CAD again right here for about an hour and a half. But for the most part, the safe bets were selling the Australian dollar and New Zealand dollar. So you can see last night, this one was underneath the hourly as of Friday, and you had a nice little narrow range pattern right here when it broke down. Usually those leads to decent trends. This one unfortunately is already at and near the lower 2.2 band. So if you do short right there, don't expect more than at least one wave of motion. Usually the fib target, when it's underneath the lower containment band, is going to be where it's going to reverse. So if you shorted it right here, 76, kind of came down and kind of went sideways here, it's usually going to move at least 2 ways when you have a narrow range pattern. This is a very high probability place to get out. And it's really debatable whether you'd sell again here. Usually when currencies are underneath the lower band, they don't continue down. So, but this really took about a few hours to go up. It broke the trend line on the way up. You might have gone short again right here. I don't think I personally would have taken this trade, but anytime you short underneath the lower containment band, usually your max profit is the previous swing low. So it came down to that level and slightly broke it. It had less weakness than before. You want to get out of that trade. And anytime you see extreme weakness followed by less weakness, you can usually expect some kind of a more stronger pullback up. So you have this nice little move up right here. I probably wouldn't have sold there, but our Elliott two-wave system is very high prediction, and it took it about 4 hours to get itself back up to the hourly here and hit that fib target. This is a very high probability place to go short, and you can see it had diminishing strength there, less than the previous move down. This is a pretty high probability place, because one of the things you want to do in taking trades is take trades that are over 50% likely to work and are also likely to give you 2, 3, 5 times more what you risk. And so this is an extremely weak currency. You gave it a chance to rally. It didn't really go up that much. Came down and double bottomed, and then it went up to the fib target and the hourly and the previous week's low. Tons of very high probability sell areas here and my Fibonacci area. So you go short right there, and whether you got out with a small profit here and then sold again here, and that one fell about 50 pips, but very high probability trades. If a currency is down too much and you see a slightly lower low or a double bottom, usually you're going to get some kind of a deeper pullback. So you really should just wait. This trade here would have worked, but I wouldn't have taken that just because it's down so much. You need at least a 2-wave pullback before you can safely bet on the trend again. Now again, this one also was in a downtrend. Weak New Zealand, strong dollar, kind of gapped down, significant number of pips, went sideways. This breakout right here is pretty high probability. And again, don't get greedy. Just draw your fibs on the first wave down, and look to exit when it gets down underneath the fib targets. Anytime it's underneath the lower band, usually this is where it's going to stall. It was extremely weak right here, but as it made a lower low, the weakness disappeared. So again, get out of the trade. And again, when it's this far down, selling the next pullback is a risky bet. This one did pull back a little bit over the next few hours, 20 pips maybe. But usually you're safer either waiting for a double top right here. This one pulled back, came back up to this level, didn't break it. You might have shorted here and here, but it's not making lower lows. And at that point, you really should wait for a deeper move up to go short. Maybe draw your fibs on here. You would have went short. You look at the first fib target, and if it shoots through there, you sell the second one. If it goes sideways there and then breaks down, you sell the first one. So this one here really didn't generate too much of a profit. And if you got short again here, you probably are going to end up with a loss here. This one looks to be short-term trend over. You could also sell this at the upper containment band. Anytime a currency is this weak, when it hits the upper 2.2 band, it usually reverses. Euro was super strong today. Between the dollar and the yen was consistently weaker. So the higher probability between buying the euro dollar and the euro yen would have been the euro yen. You can see this was above the hourly right here. This breakout trade right here is not the best trade because you have a Fibonacci area here. But once a resistance area like a fib level gets broken, usually on the pullback, if there wasn't sellers there the first time, there's not going to be sellers here now. This is a nice pullback to the hourly, and once the weakness kind of disappears on this bar right here and it breaks out to the upside, pretty high probability trade. And usually when you have a strong currency like this and the other one's weak, you draw your fibs on there, and you can just simply put your profit target a few pips underneath the first fib target. In this case, it's also our upper band. You know, maybe put your target here at 78. You would have been long here around 30. That's almost a 50 pip move while risking 15 pips. You know, that's really what it comes down to. High probability trades with a high odds of it working, where the win, if it does work, is much higher than what you're risking. And this was an incredibly strong trend up. It pulled back with a little bit of weakness on a few measly bars, and then it went strong again. You might have went long again right here with your stop underneath the low, and it came up and double topped right here with less strength. If you wanted to exit that trade here, anticipating a possible reversal, waiting to see if it can go below this low. If it does, you know, the uptrend's over. If it doesn't, as in what happened, you know, go long again. So if you had bought this pullback here and it failed to go higher, you'd be out. Kind of pull back a little bit, and you can see on this bar right here, there's a little bit of strength. And so anytime you see strength even before the breakout of the trend line, it's a higher probability. And now you have, excuse me, you have this area up here as the next possible profit target. 10-day moving average, weekly pivot, and above that is my fib level. This would be really where I would get out of this trade at, because it's usually not likely to continue that far above the 2.2 containment band. You know, and this one was so strong that it did. But this, you know, 115.20 makes a high probability target. If you're in that trade, you made another 50 pips. Using the currency meter to really spot, you know, which ones have the strongest trend. You can see the euro was super strong all day. During the weakness, it had almost no weakness at all. It was a no-brainer to, you know, whenever the weakness is less than strength, to assume the strength is going to come back, and it did at 9:30. And this was the weakest one. You could have also bought the Euro Australian and Euro New Zealand. You know, also no-brainer trades. Notice this just went straight up all day. You know, the little pullback right here, sideways consolidation breakout right near the upper bands. You know, if it was 20, 30 pips above there, I wouldn't take the trade. This is also a very high probability trade, and it went up, you know, another 80 pips, just straight up. So it doesn't take a rocket scientist on a day like this to make money. I mean, the euro was the one to buy, mostly against the yen, occasionally against the dollar here when it had incredible weakness at 5. That was a high probability place to buy it on. And you can see that the euro was initially weak last night, and then came up and went sideways. Anytime you have a multi-hour sideways range, you know, not at the lows, but 10, 15 pips above it, you don't know the trend's up until really right here. It breaks above the hourly, pulls back, and doesn't go below the lows right here. Then comes back right to the hourly here and has some selling. Can't get above it. When it breaks out, this is a very high probability trade. You have this as your first profit target. The upper containment band is your next one. You know, pretty high probability trade. You know, I probably would have got out of my trade right here with some counter trend signals. It pulled back. There was only one bar of weakness, and then you had some, you know, you can see right here as I click these bars right here. This bar right here that went sideways after 10-15 pip pullback started to have strength again. It breaks out, and you're in. And notice our IntelliTrend bars stayed green the whole time up, you know, until right here. Usually the upper band is where you want to get out, and anytime a currency's moved a lot, usually you can expect a two-wave pullback. Draw your fibs on the first one. This is a perfect example of an Elliott two-wave pullback. I usually like to see a little bit of a sideways action right here, and I would have went long right here. As soon as it went above those red bars, long. Stop is right underneath the low by a few pips. And initially it went my way, and then pulled back, didn't stop me out, and then exploded up. And at that point, you have incredible strength all the way up really till about right here, and you're out of the trade. You also can draw your fibs on this last wave up, and it makes a great place to get out of the trade with profit. Usually somewhere near the 1.382. I would have actually personally got out of this trade right here at the weekly pivot. It's way above the upper band. You have a fib just a few measly pips above it. It's not worth giving back 10 pips to only make another 6. In this instance, it shot up a little bit more than that, but you can see incredible strength right here. So it was pretty much a no-brainer to, at the very minimum, get out of half of the trade and just kind of see what happens. And this one went up another, 20-something pips. The New Zealand was weak today. Really, the euro was stronger than everything. So, and also when the Swiss went extremely weak here at 11, pretty high probability trade in the euro Swiss. Notice this one was above the hourly all day, and you have a nice little wedge pattern here that took 8 hours to form. High volatility with volatility gaining less and less and less and less, and then it broke out. This is a very high probability trade right here. And let's put our IntelliTrend histogram on here, just so you can see how this looked. Let me take this other one off. You can see as this was going sideways, there's a lot of strength right here, a little bit of weakness, then it pretty much went away. And as this bar broke out right here, it pretty much stayed strong all the way up. A little bit of weakness right here at the upper band, but not much compared to the extreme strength. 4 times more strength on the way up than this little pullback. But really, the high probability trades were this breakout right here. If you missed that on a tick chart, you could have bought this pullback right here very easily. And also this would be the last place to get long, and it hasn't yet hit the profit target, and it looks like it actually has. This would be where you got out, right, the fib target. If you had bought this last one right here at 13, you're out at 52 for about a 40 pip profit. You also could have got in that trade here, stopped right underneath the hourly and the previous lows, and got out of the whole trade here at the weekly pivot for about 70 pips. So use the currency meter to find the high probability trades. And in this case, the divergence wasn't that good, but sometimes you see it. If it has a little bit of weakness, then some strength, and strength disappears. This would have been impossible to predict. The Swiss would have this much weakness because the longer term trend was up. The no-brainer trades were the euro against the Australian, the New Zealand, and the yen today. And also this one right here, the pound. Some strength, weakness, strength. The strength kind of disappears. This kind of shows anytime you have strength through 3 to 5 hours or more, and you see a pattern like this with extreme strength followed by less, it's pretty safe to assume that soon afterwards there's going to be some weakness in the pound. So coming up to 7, a euro pound trade was very high odds for a breakout. Here's 7 o'clock right here, coming up to 7. It's already above the hourly by this breakout of this trend line pullback right here, and it really doesn't initially shoot up. It only goes up 10 pips, pulls back, goes up again. You always want to have your fib of the first wave on there, and you can see it eventually hit it. But notice the extreme strength on all the up moves, very little weakness on most of the tiny little pullbacks, which means the euro is very strong against most of the currencies while going up, and very mildly weak on the way down. That's your safest trades: strength on the way up and very mild pullbacks.